Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is Monday. TGIM. Thank goodness it's Monday. And what do we have going on today? Let's check it out. There's the dollar index. You see it's trying to pick its head up a little bit, but we're still in that daily sell there. You can see that right there. And you can see we're in the weekly sell for a second week. It went into the weekly sell. It's been a long weekly sell. You know, it started off back up in the, let's see, when was that? Let's just look at it that way. So back in July, the last week of June, first week of July, basically, because it says July 5th on that. So I mean, the 4th was Thursday, I believe it was, or something like that. So it definitely, you know, it was the ending of one and the beginning of the other. Where was it at? Right there. Yeah, because there is the 28th of June. So, and let's see, where is it at on here? There's June. Yep, June. I love how that box here. This new beta is very comfortable. You see, we went into a weekly sell up in here, and it's just been zigzagging its way down, you know, and we threw it up onto a weekly buy a little while back there. I think they were confused at one point. You know, they weren't sure if the Fed was going to cut, or I mean, we knew it was going to cut a quarter, and you know, we weren't really sure how healthy that is, because you know the in fundamental terms right now. Let's get that up there a little bit more like that. There we go. And then let's get the spreadsheet up on a screen like so. There it is. But in fundamental terms, you know, interest rates are historically low. You know, I mean, we're talking 4 3/4. You know, I mean, we've had 21% interest rates during high inflation. The best it got up to is like the 5-ish area. You know, we have employment numbers that keep on saying that we're only, you know, we're at 4% or 3.5%. That's historically, that's full employment. You know, so I mean, as I heard someone ask one of the Fed governors this morning, it was like, why do you need a 0.5% cut if you have unemployment at historic lows and you have interest rates at historic lows and supposedly the economy's doing great and all we see is inflation? Why are you cutting interest rates? Because that's only going to fuel more inflation again. And there wasn't much of a, you know, they were like, well, we're trying to prevent something from happening. It's like, prevent what are you trying to prevent? We would like to know as traders, as investors. We want to know what you're trying to prevent. Hey, Robin, there wasn't much of an answer to that. You know, that's like that word salad that Mrs. Harris does all the time. You know, it's like, when I was a little girl, we had a front lawn. Okay, but what are you going to do to, you know, cut the inflation? Well, we used to mow the lawn. Oh, okay. But what are you going to do to cut the inflation? Well, we're going to be a joyous economy. You know, bait and switch all day long. So, you know, that's maybe why we saw that little bump in the, what is that? Now, where did that come from? Okay. Trying to figure out where I'm at there. Oh, okay. I see it. Yeah. So maybe that's why we had that little bump there. You know, we had that little bump because there was a little nervousness going on and it started to shoot up. You can see that right there. And that was 3 weeks back in, you know, the week of I guess you'd say the 9th or something like that. Yeah, the 9th. So, the 9th? Let's try that again. Yeah, 9/13. So there's 9/13 right there, maybe? That's the 9th. Okay, yeah. So you see, right, let's move this over a little bit just to compare it, put it together. There we go. Yeah. So they started getting a little nervous there. You know, there's the 28th of August right there, yeah. They started getting a little nervous there. What is that? That's 9:06. There's the 28th. Yeah, so it was down, and then all of a sudden, momentum started to turn, and you can see them break through the manifold here in that area. Can you see that? Let me just see if it's showing up on the screen. Yeah, there it goes. It shows right in this area here. You can see that, can't you? I'm just double checking. Because I don't see. Maybe I have to do this mouse instead. Go like that. There we go. Okay, so there it is. So you can see here. Let's move this one over too. Oop, not there. Like so. There we are. It's nice. We can move them over and look at them and try to understand what's going on there. And there's the, I guess the 6 is right there. Or is it right there? There's 9.5 and 9.6. You see, they started anticipating something in there. You could see we pushed ourselves into that weekly buy, and then it failed altogether again. And then they cut the rates. And now what's curious is that we're seeing yo-yo robbing. What we see is like bonds have gone up in price. No, I'm sorry. Rates have gone up in price since they cut, and bond prices have dropped. So, in other words, interest rates are rising, and they cut rates at the same time. So that's why the Fed always calls them the bond vigilantes. They won't listen to what the Fed says. They say we're more powerful than you, and they are. And so you have the Fed playing games every day, giving away free money. And the bonds will only invest in so much. They'll just stand to the side and force the Fed to buy the bonds. See, that's a big difference now with QE. They can go out and just grab the Federal Reserve can go buy bonds just like the bond traders can buy bonds. They're buying them and stockpiling them, and no one seems to be able to stop it. Mr. Trump tried, but they wouldn't even accept an audit. They wouldn't even let them look at the books and see what they do have. So they're out there on their own, the Fed. They do what they want, when they want. They bankrupt the planet. That's what they did. They allowed the planet to get bankrupt. And now, I saw this morning, which one was it? It was in the Financial Times. The Citizen, was it Citizen? Let me go find it. Let me put it up on there. While you're there, let's show you the stock market. Also at the same time. Right there. You see we're moving. It's been a wild night. Check this out. Now, I saw on Docdow they're doing a webinar on trading the range, I think it was called. Let me just double check that. Let me just throw it up on here real quick. Can I do that right there? Where's it at? Docdow webinars. Let me just show you this. And then I'll show you why I'm putting this is floating in the back of my head. Where's it at? It's webinars. Where's webinars at? But anyway, today there is a webinar on trading the range. Marketplace about where is on it? Docdow TV. Maybe it's right around in there. Docdow TV. Where's the Docdow webinars? It's around here somewhere. I get it on another page all the time. So let's see. Let me see. Docdow webinars. Let me go just read you the title instead of me trying to find the title. Right there. And the title today is, where's it? Docdow Academy. Let's see if I can find Docdow Academy. Where's Docdow Academy? It's around here somewhere. Docdow Academy. Bonus programs, trading specifications, margins. Let's see, binaries, cryptos, banking. Anyway, the title is, which is the second? No, where isn't that? I saw it. Oh, here it is. How to trade support and resistance inside the trend. This is going to be on at 11 a.m. Eastern Standard Time here in the States. And that's coming up on Docdow. Let's see, where is this? This is Docdow YouTube. Okay, that's what I'm looking at. Docdow YouTube. So let's see if we can get Docdow YouTube. because I want you to see this, because I saw this, DUKAS, and then we'll go back to the bonds. It fits all in with the bonds, but this is a perfect example. Dukascopy YouTube space YOU. There it is, right there. There it is. And there it is right there. Trading support and resistance lines. I think that's, and that's I saw that this morning and I thought to myself, let me save this so I can go back to this. It makes it a lot easier. Bookmark bar. Yeah, why not? Done. Okay. Dukascopy Academy there. Cool. All right, so let's go back to, let's minimize that now. Bing. And Bing. There it is right there. And let's go over to it right here and look at that. Now look at this. This is last night. There's a support. This is Friday. Here is last night in Europe, in Asia to start off with. Run it up to there. Then European hours start right here. This is where Frankfurt and everybody start trading. London and all the exchanges in Europe start to trade right there. They sold it down. And what do? They hit that same number we've been looking at for like a couple of weeks now. And then it bounces off of it. And this is exactly what that webinar is saying. Let me go back to the webinar again. Bing. And let's see, we can go all the way over to there. There it is right there. And we'll just pull this down like so. And that basically is what they're talking about. That's what the webinar is going to be about. That is right there. How to trade support and resistance inside the trend. And I think, that's we talk about that a lot. And, at time, well, I talk about it here, there, and everywhere, I guess you could say, at given times. I mean, it's not like I focus in on it for a whole webinar. But we have done that, but it's not, it's not that complicated to begin with, so it's kind of cool. So, just thought I'd give a heads up. There's a perfect example of what that webinar today is going to be talking about. Here it is, support and resistance areas. And I think when we go back and look at it even more, you see it does it again there. See how it does it there? What was that? That was Wednesday of last week? What was that? That's the 20th. I guess the 20th was Friday. Okay, so last Friday it did it again. Notice how it bounced off of this area here, bounced off of it again, came there. These lines are still same place. We've been on, we go back and look at our webinars every time we look at the daily, or, look at things like that. You can see it there again, riding it, going down and testing it, breaking down there. There was a lot of issue going on there. That was still, I think, the 20th, wasn't it? Yeah, that was the 20th. That was like an hour into U.S. markets on Friday. So, and we've been watching that for, I don't know, a week or so. We've picked those numbers out ever since they busted through it on the upside about 5-6 days ago or 7 days ago, something of that nature. Just thought I'd show you that. And at the same time, what did I want to do on this one? I probably wanted to do the Dukascopy thing. Maybe that's what I was trying to do. I was trying to put up what I put up on the other screen. So that's good. That's fine. So now we go back to, we wanted to go look at the bonds. And so let's look at some bonds again. They've lowered the interest rates back last Wednesday. Let's take a look at the 30-year bond in price. Remember, the price is the opposite of the interest rate that they pay. So let's see if we can find that. Here's the 10-year right here. And you see the price has been coming down. Came down a little bit more. It popped on Friday. And now it's trying to pop down again. But still, this is where you would build. See, like right there? On a short term, that would be the resistance line or support, depending on if it's on top of it, it's a support line. When it's below it, like I guess you could say is like when it challenged that high there. If I can get the arrow to do that, let's see how we do this. Maybe if I make it smaller, it'll do it. I just want to get the cursor up there so I can draw the line. But basically, that becomes a resistance because of that right there, that peak. And it hit it and drops back, runs, hits it, drops back. That becomes called a resistance. Down here, that would be called a support because it hits it and goes up, hits it and goes up. That's what that webinar is going to be all about. Well worth watching. I say tune in, traders, if you can. So anyway, when it comes to the 10-year bond, as you can see right here, it's trying to work its way back down again. And I guess we could go like this, and you can see it like that. And if I go like this even more, you can see closer how it was moving down from a price of 114.92, got down to 114.22. So it knocked it down, and then they popped it up on Friday, and now they're knocking it down again. Here you can see we're in sells for the last 5 days, and we're flirting with the weekly sell. They had a good idea that there was going to be an interest rate cut. So, there was no doubt about that. The question was it going to be a quarter or a half, or as some of the Democrat senators were screaming for, 0.75% drop. That's when they ask and demand and send letters, it's not interference. It's only if a fiscal responsible Republican says it shouldn't be done, then it's interference. Let's see if we can find the 30-year bond. Is that what it is? That? Yeah, I think that BZ. Let's see if we can do this again. There we are. We'll know by the price. Now what is that? That's Brent. That's Brent oil. That's what that is. So it must be. It's B something. We'll find it in a few seconds here. I think it's lower down. This is the 30-year bond. So that's Brent, BZ. And let's see. Where's the other bond? The 30-year bond. So anyhow, that's what we're talking about here. We're talking about, the way it's bouncing off of a trend or a support or hitting resistance. Let's see. That bond must be higher up. There's orange juice. Not sure where it got to. I think we have it on here. Let's go over to here and see it. ZB. There it is right there. Now here's the bond on the old platform. You can see the price has been dropping. This is the 30-year bond. So it's fallen from, where is it fallen from? It's fallen from 126.28 down to, in 3 days, it went down to, that's when they cut the interest rate, and instead of it going up, the interest rates rose on the bond market. And again, that's why they call them vigilantes. So it got up to 127.22, and within 3 days, it was at 124.22. 3 full handles. 3. And then it tried to rally there on, what's that? That's last night. And then I don't have the ZN. That's why I don't follow the ZN as much because of that. Because I find the 30-year bond is so much more efficient. And you can see at the right time right here. It's trying to go into a weekly sell. Now, it's not anything magical there. Went into a weekly buy a couple of weeks ago, anticipating this move after, I guess, this big pop. They've been believing for a long while that we were going to see a 0.25%. But, this is how you build trend lines like that. And you get resistant lines right there like that. How it hits those areas and stops, and then you can go back, look further in history and see how they play around those numbers. But at this point in time, there's a big question mark, and that's how this all conversation started. Is why did they need to do a half if everything is so good? And no one can be too clear about it, just that they want to make sure that it stays good. That's what they say. They want it to stay good because, the spending is out of control. And the Federal Reserve keeps on giving them money to spend, so they can borrow it. If they can't borrow it, they can't spend it. And so the Federal Reserve makes sure you can borrow it so you can spend it. All right. Now from there, that's I think we've drifted in our thought a little bit, but we were talking about trends and resistance and support because when we look at the stock market, you can see it's doing that same gig, doing that same old thing again. There's the S&P 500. It's hitting that area again. Matter of fact, it's just above it. And that's what they call a melt up what's going on. The bigger question is, will they go back to challenge this that was 2.5 weeks ago? Not really sure if they're going to get that low. I would think if they sold off, they'd probably come into this area here, the 5,600 areas, which is only like 170 points down. So, and you can see here, everything seems to want to lift up. It's trying to be strong more than weak. And we are 3 and we're at a 6. Is that right? 2, 3, 4, 5, 6, 7, 8, 9 days now in a daily buy. And we've been in a 2, 4, 6, 7 weeks in a weekly buy. You see the fast has dipped down about 4 weeks ago, but brought it right back again. So, and that is what we're talking about here, is that the fundamentals don't make sense to the actions of the Federal Reserve. And then when you look at the resistance and support lines, you start to wonder, will they support? Will they hold up? Will they fall apart? That's constant. And I guess, if the Fed is constantly giving out free money to institutions to hold overnight, then they're going to basically not sell these things. They're going to hold on to these things. Because, if someone said to you, I'll give you $500 million to be long, I think you wouldn't fight them and say, no, I'm not willing to take your money for free. Yeah. No, I don't want your money for free. I want to pay for it. Yeah, that's the world we live in, traders. That is the world we live in. And Doc is here to remind you all the time about the insanity that we watch. That craziness, it's like, what? Why does Citadel get $1 billion overnight for free every night? Every night they get $1 billion to hold on to, do nothing with but invest for free. It's like, well, twist my arm. All right, I'll take the $1 billion. Oh, well. Sure, I can't pay anything for that? Oh, no. We're the Federal Reserve. You can have it for free. Oh, that's so nice. All right. From there, we'll go over and take a look at the euro. The euro is showing the same concern, which is very interesting here. There is the euro on the spreadsheet. You can see that. 11 weeks in a buy, 7 days in a buy. And let's go take a look at the euro. Well, there's the great experiment. It's doing something interesting today. But there's the euro. We'll get to the great experiment. You can see right there, the euro is actually, it's perked its head up since when I was looking at it an hour ago, it was actually in the minus. And you can see the weekly is in the minus right now. So wait a second. If fundamentals say interest rates are dropping in America, doesn't that mean you should be buying euros and selling dollars? Again, that's that fundamental thing that, it's just not looking right. But then again, when you got, mommy and daddy Fed making sure that all the little Feds or all the little central banks are happy, they give you free money. And all the little investors, Citadel and BlackRock and, name one, JP Morgan Chase, all the little investing banks, give them some free money too. Everybody in the game, let them have free money. All right, and so we're seeing this little ache going on inside of the euro at the moment. In other words, it's trying to tell us, no, the interest rates haven't dropped really in the United States. They're going up. But I thought they just cut them in half. It's like that story keeps on going back and forth. It becomes more and more confusing constantly, doesn't it? Isn't that fun? Don't you just love the Fed? Don't you just want to watch and be pals with the Fed? Oh, joy. Alrighty, from there, we will dip our way over to the cable. See what the cable's doing this morning. There's the cable. Now, cable's looking a lot more firmer. It's above yesterday's close or Friday's close, and it's not flirting with its weekly. And we say that all the time. We find that the cable is really strong, and we say it's the pairs trade Euro GBP pairs trades in a weekly sell now for 3 or 4 weeks, 5 weeks. Take a look and see. Let's see, right there. Yeah, there's a 2, 3, 4. This is the 5th week now. Since this 84.75 area. And now we are at 83.40. Let's call it 83.50. Just round them out in 75s, 50s, 25s, evens, that type of thing. So this was the anticipation. And there's a trend line we talk about. I think we've watched this trend line a while now. And we did the same thing. I think there's a trend line we watch on the euro. This is back in June. It hit that. That's, as they say, a support line. And then it fell apart again. And this would be the resistance line right here. Let's put that in there. That was a support line at one time. You can see how it bounced off it for a while. And then finally it rolled over, came down to this one. And I'm sure we can find it on the opposite side somewhere. There it is right there, way back. Let's see if we can see that. No, that's not it. It may be like 2 years out. There we go. There they are right there. Back in July of 23? 22. That's July of 22. And that's how we pick these lines. We look at old areas, and they seem to, people, money kind of drifts to it. You can see how it hit the top of that in July of 23. Is that 23? Yeah, July of 23 and June of 23. Bounced and lifted again. And then you can see it doing again in, what was that, February of 24, right there. And then finally it rolled over. And, there was a little confusion about, they kept on believing, 7 cuts, 7 cuts, 7 cuts. Well, obviously that 7 cut thing didn't seem to work out. Then now it's finally happened after almost 11 months. They finally cut it. And you can see how it bounced off that area with some real vengeance playing up in here. And I guess you could actually start something like this too. We could go like that. Something like that. Bring it down to there like that. Notice that when I grab it, it also seems to be flirting with that at the same time. And so that was the, it's kind of like that. Oh, that's the Euro GBP. So we're looking at the Euro GBP resistance and support lines. And now it's pierced one that hadn't pierced since June of 22. June of 2022, it's breaking it down again. So when when this is going down, obviously the cable is outperforming the euro. And I started talking about that too because Commerzbank of Germany just got somebody that ended up buying. Remember, they were trying to merge Commerzbank with basically bankrupt Deutsche Bank. And they tried for, a couple of years. It just didn't work. They couldn't do the marriage like we did with Merrill Lynch and Bank of America. A weak, lost, bankrupt one, Merrill Lynch, and a successful one holding on that didn't get trapped in the collateralized debt obligation collapse across the planet. So, and there's your resistance and support line things. So I thought, I saw that we were having a webinar today on it, and I thought, why not talk about it a little bit? Just show some of the fun so that they, you go in there and you see what's going on. We always show them once in a while. It's not something we dwell on, but it is interesting. You can see here, where is that interest rate cut? Why is it not treating the euro so happy? Now, do I really think we're going to go down to this 23.6 again, the 108? Not really. I think it's pretty clear that rates are going to go sideways to down in the States. But obviously, most of that is already in the market. Money, and I've been telling you that for almost like 9 months now, maybe 9, 10 months, ever since they declared that they were going to cut interest rates. Back in November of last year, we've been saying they know now. Money managers know now that they are going to do that. Matter of fact, let's see if we can find November of last year. There's June. Is that right? Let's see. Okay, so we have to go back further. There it is right here. So this is where they declared it. The Fed declared it, and you can see there was a nice rally out of it. Got even higher than the Fibonacci sequence that we had parked against it for the last 9-10 years. And then you can see here it became a kind of, it was playing the support, I guess you could say. Lifted up again and then finally started to break. Sometimes it's 3s that do it. Sometimes there's 5. And then it got very close trying to get down into this area. But notice it was a higher low. That's why the higher lows are paid attention to. And so you can see there on the euro, they climbed up to the support area up there and resistance and, bounced around it. And then you can see here in this spring, we all knew that they will cut. We knew that part. That one's obvious. The question was when. And we knew September, after they pulled 818,000 jobs out of the labor market. We told you that was a guarantee. That was definitely a guarantee. And so, once they did that, we knew that the rates were going to go down and prices of bonds were going to go up. In this case here, we knew that they were going to sell dollars and buy euros, because that's what money does. It likes to park itself in places where it can make money. I know that's a little alien type of thought, because, a lot of people are used to trading now since 2009, starting in the Obama era, where we had interest rates at 0. And that went on for over a decade. 0 interest rates. Minus. Actually, they were minus. You wanted to buy a government bond, you had to pay the government interest to own the bond. So not only did you buy the bond with money, but you had to pay the government interest too. They didn't pay you interest, you paid them interest to own the bond. That's when you say something like that out loud, and it's a reality, of course. I mean, everybody knows it's true. You have to wonder, what's the problem here? Why do you have to pay the government money to own their bond? You're going to lend them money. Okay? You're going to lend the government money. At the same time, you're going to pay them interest to lend them money. Wouldn't you like that to go on? Wouldn't you like to do that? Put money in a bank, and they pay you to put the money in a bank, and then they pay you interest to put money in the bank. So, give it to you for free. Wouldn't that be cool? Well, it was a reality for every major institution. It was a reality in a backwards way of life. So, it wasn't until Mr. Trump came in that they started to stop that stuff. Mr. Trump was like, this is not reality. You're hurting retirees. You're hurting pension funds. You're hurting everybody. Making them lend you money and they have to pay you interest at the same time? That's insane. But do you really hear it more than from Doc? But when we say it out loud and we talk about the reality of it, it sounds like fantasy, doesn't it? How many people here think that's fantasy? That what Doc is saying is not real? That it didn't happen? I can't wait for somebody to tell me that I'm basically fantasizing about it. Fantasizing for having $1 billion for free. That's nice. All right. From there, we go over to the Swiss, the great inflation fighters. Look at that thing. Parked down there in the 80s, low 80s. That poor product was up at 101. Wouldn't Turkey love something like that, where it was trading at 40 and now it's trading at what's that, 15% drop? So what's 15% drop? It's 7 points. So wouldn't it be nice if it was trading at 32 or 31? Where is it trading now? Let's just jump all the way to the Turkish lira. It's not down there. When's the last time it was at 32? Probably about a year and a half ago, 2 years ago. We've had some spikes down to it, but it hasn't really closed down there since February of last year. Right there. February of this year. And then you can see it went into the weekly buy in the 29 area and stayed in that weekly buy all the way up to 36. We went into a weekly sell for one whole week. Woohoo! And we went down to 35. And then we were in a weekly buy, and we're still in that weekly buy. But today, guess what, traders? Look at that. It's underneath. So it went up to 40 from 36, was it? And so now we're flirting around the 38s, 37 and a half, 38, something like that. And we're playing with a weekly sell. Been in a daily buy for 6 days here. Looks like it's trying to break down. This is going to be interesting. That's Turkey for you, I guess. But let's go back to the inflation fighters. Again, what a wonderful central bank that is. We think the Federal Reserve in the United States should hire some of these Swiss bankers. We think Turkey should just give them the key to the door and say, here, do what you do. I mean, their poor currency's gone from 1 to 40, so I think they would love having a Swiss banker straighten their place out. That would help. Inflation is a horrible tax. Just a horrible, horrible tax. All right. So from there, let's take a look at the yen. Yen's been sticking its head up a little bit. Nothing major. It got below the 40 here for a couple of days, which is really cool. Come down from the 161 area. And we've been in that weekly sell since the 157 area, 158, right in here, where we were at 40-year highs, no more than a week and a half before it went into the weekly sell. And then, we've fallen from what's that? That's the 158 area, 156 area, all the way down to the 140 area in that weekly sell. And now we're starting to turn, and we're hoping that this just gets kind of tired and goes sideways for a while. We don't wish inflation on anybody. Not even the currency that will not be named, Mr. and Mrs. Ruble, or the Iranian currency. We don't, because it hurts the people. It doesn't hurt the government. It hurts the people. I mean, Turkey is hurting the people. It's not hurting the government. The government is going to keep on doing what it does. So, that's why we don't like inflation, because it hurts the population. It makes things really tough. All right, so there's the yen, and let's see what they did with the stock market over there too. Let's check that out. Let's see what the Nikkei did last night. There it is, right there. There it is. Let's put that up on the screen. Oh, you can see there, it's been lifting up for a bunch of days. You can see here, make it even bigger. See, that's what's neat about it now. You can really get in there and see. You can see it's been in a sell, and it's been going up for the last 2 days. See what the weekly's doing. The weekly's still in that weekly sell now for a third week, since up in here it went into the weekly sell. This is more of what we refer to as a dead cat bounce. This is more of a dead cat bounce. We'll keep an eye on it, but overall, we do say this here. We try to remind you all, and that is that the best way to invest against inflation is obviously the stock market. Public companies are the only ones that can really raise prices and make a profit still. It makes it very hard. It's hard for everybody because the politicians who are creating this mess to begin with, they're too much taxes, too much spending, too many dollars chasing too few goods because the policies themselves are against capitalism. That's what does it all the time. Who thinks here the government can make better decisions than private investors? And I guess if they did, they would be private investors, right? I mean, private investors are much better at it. It's the law of creative destruction. Whereas politicians, do stupid things and get raises. Whereas usually money managers get fired. So that's where we're at. And you can see here we've been in the cell for a bunch of days in here. Matter of fact, they went into the cell all the way back in here. We went, what was that? That was the third right there. Went into the daily cell there. And it was in a weekly cell that week. And bang, 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 bang. And now we're getting, just right here is being a little odd. We saw a little strength here. Where is it at? Was there strength there? Or was it right there? No. No strength at all. Even with the green dots, I guess that one was a plus. Came down here, gave us a plus there on the 8th. I guess right there. Well, that's a 6, so it must be it right there. 9, 8. And there's 9. 9, 8, I guess is. See, how's that? There's the 9th. Where's the 9th on here? There's 9, 5, 9, 9 right there. It was a minus. Right there. That went into a buy that day. And then fell back into the cell. Rolled over. We're in the weekly cell. You can't be long, of course. So you can see the way it's been real fighting. These last 2 days have been interesting. Look at that. That's because of the interest rate cut. It's cheaper to buy stocks. You can buy more stock now on margin because they lowered it a 0.5 percentage point, which is, one way to keep the stock market up. That's probably the only good reason why you would cut interest rates. Cut them so you can keep the stock market up. That's pretty much it. Which we're always saying that maybe, guys, you shouldn't. But no, they do. What can you say? Excuse me. So, let's take a sip of water there. All right. Now, from the yen, we saw the Turkish lira. And like I said, it's trying to go into a weekly sell. We'll see how that plays out the rest of the week. And then we go to South Africa. Africa. Right there. You can see it keeps on trying to push down, even when they lift it up. And with that, we would assume, right there, the gold should be higher today than it was on Friday. And it is, right there. It's 3 days in a buy and a bunch of weeks in a buy, that type of thing. And, the fast did drift into the sell a little bit and then popped right back into the buy. You can see that interest in the metals market. A lot of people think maybe they better own some gold, some silver. Same thing with the silver. There is the silver. Same way. Now that's interesting. Today it's down. How about that? So they're buying gold and selling silver, obviously. You can see here it's breaking the manifold there. And we'll see if they try to push it into a weekly sell. And at the same time, we can remind you that gold is about $23 away from all-time highs, whereas we look at Mr. and Mrs. Gold, and they are at all-time highs. The all-time high now is $2,656. Now, what's interesting, and it always, let's see if we can put this on the screen. What always catches my eye, let's see which one we're at. Okay, that's it. So you're not seeing what I'm seeing. Let me just go back to that again. Right there, you can see gold at all-time highs. Let me just show you again. Here is silver. Silver's acting a little wonky. It's down for the day. And you can see it's even the weekly's trying to turn there. Now, when I go back to the gold, because gold's at all-time highs, and silver is like $23. Like I don't know, what's that? 41% away from all-time highs, and gold is at all-time highs. 41% is not 4%. We're talking, it's got a good hike to do. So we go back to the gold, and I want to show you something I think is well worth showing. Because it's a good example of the way the markets look at gold. Okay. And I'm going to show you right now, and it's going to be on the other screen. Here it is. And so we see here is December gold. Okay, we see September gold, which is expired now, or just about. It only has 17 volume yesterday. You can see October gold, which is trading at $2,628. Notice it's going up in value. And it traded 3,900 contracts. Then you have November gold, which is about $11 higher. Live trading there. And you can see here it's traded 367 contracts. No one cares about it that much. You can see it right there. It's only 745 contracts in open interest versus the 42,000 in October. Now, normally we would have been following the October contract, but the volume in December is 78,000. See it right there on Friday? And at the same time, the open interest is not just 42,000 like October. It is 450. It's almost 500,000. 452,000. Almost 453,000. So it's 500,000. Now, what's interesting is when you go and look at something like the April contract, there's gold right there at all-time highs. It's $2,652.70. And what is it? It's 30 some odd dollars higher in April. So they're always nervous about the idea of, matter of fact, which is interesting, is just a couple months later, it's $22 higher, and open interest is at 28,000. April's is at 19. These are the major trading points. It used to be December, February, April, and I think it was the June contract. And then it, got a little sloppy, and then we went back to October as a biggie, and then obviously the December contract again. But we're starting to stretch this out, if you notice. In other words, they're not playing with the Octobers, and they're not paying attention to them, and they're just paying attention to that. And you can see February is starting to build up already at 28,000, and you can see the volume is 14,000, a little less than a third of the October market. When it'll be interesting to see when that does it. But notice that's what is that? That's $24 higher. $24 higher. And then go to December of the following year. It's almost $100 higher. $2,748 versus $2,652. So it's almost $100 higher a year later, not lower. So in other words, usually costs eat at it, the interest charges to hold it, that type of thing. And then if we go look at December of 26, we're almost $200 higher. It's $2,837. And you go back out even further, $2,900 on December of 28. In December of 29, $2,900, it's pushing itself towards $3,000. It's like it's already there. You're looking at these prices are live. They're real. And so when we look at the South African Rand, let's go back to that again. Again and again and again. Right there. The South African Rand is trying to tell us that that they're buying the metal, gold in particular, because it's moving down. Now, again, we believe that a good 33% premium is in the South African Rand because of political reasons, poor government policies, and obviously I could say the same exact thing about the United States. We do think that the dollar, which is basically the most powerful currency on the planet, because why? Because the world has become bankrupt. Central banks are all borrowing money from the Federal Reserve all the time for overnight and so forth. We show that once in a while. We do show that, where we see the overnight lending, and Switzerland's in there for $4 billion. It's we see Britain in there, the Exchequer in there borrowing, $6 billion for 90 days, things like that. So they're it's a very very upside down world out that we're in. Back before 2008, before the Obama era, going into 2009, the world was competing with each other. May not have been the best, but they were competing with each other. We're at a point now where there's no competition whatsoever. It's just the U.S. or broke, one or the other. All right, but I thought that was interesting. Looking out into the future, what they think gold is going to be. They're not discounting it. Remember, they have to pay interest on that. So believe me, they're trading it at a higher price and paying interest on it at the same time. So that tells you right off. Huh? Oh, they hit tie. Okay. Yeah, that's. I think they're gonna. I'm seeing up on the screen here. The Israeli strikes Hezbollah targets as conflict grows. And you know what? We can go over to two other metals, and then we'll go right to the energy. We should go to the energies really and see what. Crude oil was only up like 8 cents. It was barely moving from all this action in the Middle East. Matter of fact, where is it at now? Is it up or down? It closed on Friday at $71. And today it's trading at $71.13. So it's only up 13 cents with all the noise and the geopolitical issues. And it doesn't seem to be stopping anything there. Let's see. Okay. So, let's see, where was I at? Oh, yeah, let's just take a look at platinum. There's copper. Copper is, they sold that down today, which is kind of curious. The way they sold silver down, but it's coming back in a daily buy now, 9 days. And you can see that on the spreadsheet right there. 2 weeks in a buy, 9 days in a buy. You see platinum's 2 weeks in a buy too, and I think that's actually underneath as we speak. There's the January contract. They're flirting with the sell now. And you can see here platinum is pushing itself. That should be over one like that. That went into the buy there, and it didn't do that good a job about it. It made a new high, but if you weren't paying attention to your trade, you would not made the money. It went into the buy, and that was at $1,003.80, and traded as high as $1,007.80. So it went up $4. It was a winner chicken dinner. But if you're not watching, you don't know what you're doing. You got to watch this stuff if you're going to trade it. You can see here it's flirting with the weekly sell. We'll see how it plays out by the end of the week. It's hard to believe it's going to go into the sell. Now we go back to the crude. And crude closed in a weekly buy last Friday. And is still trying to climb. And let's go over and look at it on the beta. Beta. And they do the same thing with contracts. You can go out and you can see, how far out, what the futures contracts are viewing, what they think about it all, price wise. In other words, they put their as we like to say, put your money where your mouth is. And there is the new contract. That's November. You see it's been in a buy for a bunch of days like our old platform. And you can see it's jumping into the buy right there. For this week, it didn't get into the buy last week. It did that well back there for this little bounce. That was about it right there. Yeah, it's it's just starting to do this. And then we already saw Brent once, but let's go see Brent again. Brent, how are you? All right, Brent is at BR. There's the bond. ZB. That was the bond right there. I'm just going to throw that in there. Just because we were looking for it and I couldn't find it. Now I'm looking for Brent and I don't see it. We'll find it. Come on, there it is. There's the bond. We showed you on the other machine. You can see how it's going down in price. Goes down in price, that means interest rates are rising. And then there is BR. Where's it at? BR. ZB, that's what it is, ZB. No. That's not it. That's the bond again. I'm going to go all the way to the bottom and start up. There, BZ. There it is. And there is Brent, and it's probably doing the same as the West Texas Intermediate oil. It's trying to climb into a weekly buy this week. It's been in that daily buy for a bunch of days. You can see it there. Was that 7 days? All right, we're out of here, traders. It's time to go. The U.S. market opens up in about 4.5 minutes. And so if you are interested in checking out our charts, here we are. Just go to that website. And we'll let you play with them for 3 or 4 weeks for free. So this is Doc from North America. And give you Robin a yell, a call, or a text, or just click on the website and they'll give you the email, and you'll be able to email them any one of those things at this website at Chicago Quant Technologies. So, thank you, Dukascopy, for having us. It's always nice. Dukascopy is very solid and is willing to hear the truth about the markets compared to 99% of the other brokerage houses that don't seem to want to hear the truth or talk the truth. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe